At this point, we want to transition from our points analogy to real-world accounting. And here, we're going to compare the accounting equations, and the concept, as you can see, is very similar, but some of the names have changed since we're tracking dollars now instead of points. So instead of total team points on the left, now we have assets. This is total assets. And like we learned earlier, assets are simply stuff the organization owns. So it could be cash, vehicles, buildings, so on and so forth. On the right side of the accounting equation, instead of asking the question who has claim to those points, we're asking who has claim to those assets. Here, others points, we're not interested in points other people have scored that are on our team, but now we're interested in those liabilities. And like we learned earlier, that is the debts of the organization. And then instead of my points on the far right side, we're going to use this name owner's equity. And like we learned earlier, that's assets minus liabilities, and it can also be thought of as what is left over when I subtract my liabilities or what I owe from what I own over here, the assets. And we can use these memory tools, which may or may not help as we think through the accounting equation in the following slides. Business checking, of course, this is just one type of asset that the organization can own. And business credit, like a credit card, that's just one kind of liability or debt that the organization can have. But looking at it this way might help us as we think through the accounting equation.